We're back. Gap hitting a new 52-week low today. JP Morgan downgraded the stock to underweight. They say sell it. They say the margin pressure is mounting ahead of the holiday season. Could be the worst time for that to happen. Gap shares down 5% today. It's our call of the day, and it comes from Matt Boss. Matt Boss, number one by institutional investor, retail analyst. So it carries some heft. Matt Boss speaks. People listen.
It does. It's a stock that's been in decline since September of 2014 when it was 46. I believe it bottomed in 2016, somewhere around 17. It's trying to make a recovery. But I think the wage story, I think the discounting story is significant. I agree with him. Old Navy continues to be a bright spot. I would focus on Nordstrom. I would focus on Kohl's, and I would focus on TJX.
What do we think? Do we agree with this call? I mean, stock's down 24% year to date, so it was already down a fair amount before this one-day decline in what has been a pretty good retail environment, right? This stock was, let's just say some other names, okay? TJX, 45% to the plus side year to date. Macy's, 28. We all know what Amazon's done. American Eagle, 13.5. What's been going on with Gap?
They had a huge run last November, and they got themselves up towards the like $34 a share. And then all of a sudden it started to cascade as you've gotten through this year, Scott. And I think part of the problem is a lot of their sourcing, by the way, is coming from China. So they talked about something like 22%, Matt did in his article. And so that's a problem as well. So you look at margin pressure, you look at tariffs and all of that, and you just wonder, to Joe's point, the one area that they maybe have a shot is just one segment of what their business model is right now, and that becomes a problem. And I think the margin pressure, when they talked about what they pay their, you know, everybody focused on Amazon when they talk about $15, right? That brings everybody to a $15 level at some point probably down the line, including Gap. That's going to be a problem.
Lindsay?
Well, I just look at the retail sector overall, and I think that they pulled back significantly over the past few weeks. And I think this could be an opportunity because I think the third and fourth quarter guidance is going to be better than people anticipate. Yes, tariffs are going to be an issue down the road, especially if we get to 25% next year. And maybe this isn't a long-term hold, but I just think there might be an opportunity. The number of containers that are shipping goods for the Christmas season has been at an all-time high over the last several months.
Feels like you can really trace it, as Pete said, to the Amazon announcement of the $15 an hour. All of the retail stocks really had trouble after that moment and had what been a nice run-up.
Yeah, no, and you know what? Target and Walmart were out there already saying that they were going to raise wages going into the next year anyway. So, yeah, everyone's going to have to do it.
All right. Thank you for being here today.
Thank you.
All right, it's good having you. Lindsay Bell, again, from CFRA Investment. She's a strategist there.